Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Alrighty, we are live. It is that time of the week. What's making headlines with Phil Tarrant, who is, of course, from Momentum Media. But let's talk about the brands: Smart Property Investment, REB. Which other one? Financial Advisor?
The advisor for mortgages, third-party mortgage industry. Mortgage business is another one, but we don't really talk about that.
Okay, he's got anything to do with money, with property, with investment. They've got their fingerprints all over it. And Phil, again, big week as we're coming back out of the post-COVID-19 recovery. Many businesses are moving forward, attempting to do business as usual, some business as usual with their new norms. But there's been a fair bit of information going around, Phil. You know, we've got stamp duty debates, we've got tax concessions. There's been a few people that have been naughty, got into trouble. But I want to ask you, Phil, this first one, 50K boost on the cards for new property purchases, right? A radical plan to kickstart the economy post-COVID-19 could see Australians handed 50 grand for a brand new home. What do you think?
I think you're going to start seeing a lot of these incentives and additions to the stimulus package coming in. This is a really interesting one because we're going to be really careful let's put away the fact that we're property investors at the moment and talk about being in the business of real estate, Tom. A lot of this stuff can potentially be an inhibitor for stuff that happens. So what I'm hearing already, so this is a suggestion from the Property Council to say, hey, look, let's get people in the new homes, start selling some properties. It's got to stimulate building and construction. Point number one, that's great. Number two, get people in transacting property. What this has done, and some of the criticism of this particular initiative, is that it's put a handbrake on a lot of activity because people are going, well, I'm not going to do anything now because if I wait a little bit longer, I might get 50 grand. So a lot of the developers and a lot of the building industry have gone, this is not good because it's going to put the handbrake on us getting deals signed, contracts signed for people to build their homes if everyone's sitting around waiting for 50 grand. So good and bad.
Yeah, well, it's funny you say that because the second story I wanted to have a chat to you about was stamp duty plan required to boost confidence. Now, 3 or 4 weeks ago, the New South Wales Treasurer, keep forgetting his name, but he was the guy that turned around and said, great news, auctions back, open for inspections are back. And by the way, we need to look at stamp duty. It's a blockage. And then what happened is I had a number of real estate agents, Phil, say, mate, on the surface sounds really good, but when you've got a buyer that comes to an open for inspection that says we're going to hold off because we know that there's going to be stamp duties going to be changed and I'm going to be able to save stamp duty. And, subsequently this agent went off and did a bit of research. He called me around. I said, look, I can't see it happening in the next few months. I mean, he goes, well, it's a problem because buyers listen to the media and make up business decisions or their own financial decisions based on what they hear. So same sort of thing with stamp duty.
It could potentially be a break or an inhibitor to business rather than getting stuff done. And this piece, Tom, was written by Matthew Tiller, who is a research analyst type guy with one of the big real estate agencies. And there's a couple of ways to try and stimulate market activity, and that is to remove some of the barriers for people to do business. That money needs to be replaced. In some states, stamp duty accounts for 25+% of revenues from the state, so it's a big hit. So it needs to be changed or swapped out in some other way. One of them is potentially to put land tax across all housing, irrespective of the ownership structure or what the purpose is for, or a change to the GST requirements. So these things are big wholesale shifts, but one of the challenges with stamp duty is that for governments, it's really hard to forecast or predict income into coming years because it's so intrinsically connected with property markets, and property markets can change overnight like we're seeing with COVID-19. So they'd love a way to actually have greater certainty or surety around their income coming in. So it makes a bit of sense to fiddle with stamp duty to try and stimulate market activity. But much like the $50,000 boost for building new properties, it just stops people from doing stuff until they work out what's happening. More information is required.
Okay. Then in smart property investment, ran a story yesterday on New South Wales Fair Trading, published a guide to actually help landlords terminate a tenancy agreement during COVID-19. It's been an issue. I mean, I'm totally aware that New South Wales being one state where you can't actually evict a tenant over non-payment of rent. But I presume, Phil, this is helping landlords understand what they can do during COVID-19 that might not have to do with non-payment of rent. Might be other issues. Like, I mean, there are tenants. I mean, I heard a tenant about 4 or 5 weeks ago say to someone else outside a cafe, he said, "Oh, mate, yeah, I just told them I'm not paying rent," and I said, "Suck it, or that's it." And by the way, I also told them I'm bringing my dog in the house. There was a bit of that sort of there. But what's that story about?
Well, this is some steps, and as another story connected with this, so in terms of real estate, we'll get into, but for property investors, from what I understand, this sort of moratorium on being able to evict tenants for the non-payment of rent as a result of impacts of COVID-19, I think that expires on the 10th of June. So it's really only a couple of weeks away. So this is pretty much a step-by-step roadmap for property investors about understanding where they can and where they can't actually evict tenants, and what they should be expecting from their property managers to support them doing that. Anyone who is COVID related, the philosophy is that you work together with the landlord to make sure that you keep people in housings. But there's got to be a point in time when this all comes to an end. So landlords, if they're not getting paid rent, they can start taking action to terminate tenancies or remove people. But this doesn't discount all the other reasons why a landlord can terminate a tenancy. So I'd go and check this article out. It's pretty detailed. For landlords, it gives you all the ideas you need. And for property managers, if you're not across all this, go and check it out. But the world's going to change in about 2 weeks' time. And this whole notion of hardship and not being able to pay rent is going to change the playing field for a lot of landlords. Yeah.
Phil, I think the talk of the town between buyers, sellers, the real estate agents I deal with is, what is things going to get worse? Like, the verdict is out there. There's a view out there, and now it's got a broad-based view that, hey, job seek, job keep, banks, unfreezing mortgage payments, all coming to the one time. Will this create, chaos out there? I mean, I don't know. On the surface, you can see that there's a lot of variable factors happening at around the same time. I know that you're not a speculator. You don't want to talk about things that you need to have a crystal ball. But do you have any view?
Well, we only heard the Prime Minister a couple of days ago speaking at the National Press Club talking about now job maker. So getting the economy kickstarted and everyone back to work. We saw since the last time we spoke last Thursday, this very small accounting error when it comes to JobKeeper, Tom, where it's not the 6+ million people who are actually on the government payroll right now. It's only 3-odd million. We've saved ourselves billions of dollars in terms of what the initial thought was around the impact of unemployment. So that's good news for the nation. It shows that the impact to COVID isn't as high as originally forecast or thought. Some criticisms around that and how they can spend that money. Everyone's thinking, well, we've already spent the money on something else, so we might as well blow it on some other things. But, the economy is starting to move back into gear. I saw some good numbers around consumer sentiment this week. This sort of collective wealth effect that people have, which stimulates buying behaviors and activities. Credit card spending sort of, is not as bad as what people thought. And credit card spending is normally an indication of how people feel about their ability to pay down that debt or have the propensity to buy consumer goods. So, it was a lot of doom and gloom in March and April. Here we are at the end of May, and there is definitely green shoots of optimism, if not more. We had a pretty good rebound on the stock markets over the last couple of days. Things are moving in the right direction. Even the big headlines of COVID-19, your Virgins of the world and Qantas standing down staff. Qantas thinks they're going to be back to sort of 50% capacity in a month or two, and Virgin's about to get sold, and they reckon they can turn that to a profitable airline. So, borders are coming down. We're going to be able to start travelling not only within Australia at some point soon, with some of these different states removing restrictions. They're talking about the Tasman bubble, being able to have a nice safe corridor with our Kiwi cousins, and then even the Pacific bubble now, Tom. 40% of Fiji's GDP is a result of tourism. So Pacific nations want to get back to business. New Zealand wants to get back to business, and they're on their way. So does Australia. So we're starting to see some good news. How that's going to impact on property markets. Again, it's going to be not to crystal ball or speculate, but some areas of the market are going to do very, very well. Those areas which are more impacted by COVID-19 employment challenges, and these are the tenancies, the rental markets, I think, are going to hurt in some areas because there just isn't the people there. Then there's a whole other equation about population and migration moving forward. We're not going to have this migration that we've become used to as a nation, at least for the foreseeable sort of 12 to 18 months. So how's that going to impact on property prices? But the smart people I know in this game, they're sort of turning their nose up about these dire projections of 30 and 40% are saying, some markets will do well, some markets will grow. As a property investor and as someone that advises property investors, as real estate agents or owner occupiers, just know your markets and provide the right advice in this current climate.
Yeah, and hope you've been stockpiling cash over the last year.
Well, this is a good spot to be in. I know you're sitting there, you're getting a bit antsy. I know you want to start buying, Tom.
Yeah, I do want to buy. But I was going to just say it'd be interesting to see the behaviour of people when we're talking about New Zealand opening, Fiji, the borders. It'd be interesting because it only came to my attention a few hours ago that you won't believe this. The girls went to school this week, but school holidays in 5 weeks. Yeah. There's school holidays again in 5 weeks. So I'm thinking to myself, what happens then? Are people going to stay home during that 5-week period? Queensland, that are watching this, they've got school holidays in 4 weeks because they start a week earlier. So I'm curious to see what will the behaviour of the Australians are going to be. Will they actually stay home, or will they go off and spend some of this money that's out there that the government has shared around into tourism? Will they actually go to Byron Bay, or will they actually go to parts of North Queensland, Cairns? Will they actually go to Fiji? Will they go to Queenstown? I'm curious.
Well, people are happy to spend at the moment. Going back to consumer spending, there's people in the sort of the footwear business, or those that target your sort of late teens, early 20s. So it's a lot more people in that age bracket who are a lot more flush now because of JobKeeper than what they were as a casual employee. So the biggest challenge is getting these people back to work and off the JobKeeper allowances, because they're making more money doing that. So this is a big issue. You're seeing the same in the US. It's people are happy to spend right now because they feel as they've probably got a few more bucks than what they normally would do. Whether or not that's the objective of JobKeeper, I'm not too sure. But I think people will travel, Tom. I think people are starting to get an understanding, appreciation that smart COVID management, you can minimise the impact by being sensible. And I see you've always got your hand sanitizer there. I've always got mine as well. Just good, smart, healthy hygiene habits. When's your trip up to Byron? That's normally in the middle of winter, is it, Tom?
No, that's Europe, middle of winter.
Okay.
It's September, and that's not happening. It's September. But, look, Byron's a great place to go, but there's probably there's a couple of months of the year, late June, July, August, it is a little bit cold. And the rest of the year, it's fantastic. But I haven't made up my mind. I'll see how the girls behave, because I might get them to actually visit their grandmother instead.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyer's agency.
So a couple of other stories here. Bill announces a new arrival. That's Stephen Burt. He's a client and ranked 17 in the country, so in the REB. Good operator, young guy here. This is a classic case. I think he's moving. I had a conversation with him actually, so I know the background to it. It's a classic case of, I think, Phil, what happens is, during this lockdown period, it gave people an opportunity to actually do an audit on their life. And, talking to Stefan, this wasn't a case of him leaving one brand for another brand in the same market. He's actually moved totally different areas. He's moved from North Ryde to Mossman, right? Because he lives around there. But what it's done is, I think, it's fast forwarded what people were thinking of doing 5 years or 7 years down the track, whether they're going to relocate, whether they're going to go and do a sea change, tree change. I know that that's happening. I've got real estate agents from Terrigal to Coffs Harbour to Byron Bay to Tasmania telling me inquiry from Sydney, Melbourne people in the city areas has gone to levels that they haven't had previously, So I think what it's done, Phil, is it's maybe moved forward plans that people had in the back of their head.
Yeah, I think it's been a good chance for everyone to reflect and analyse, because when you're really, really busy, you don't get much chance to sort of get up and above it all and be detached from your day-to-day decision-making. So COVID's given a lot of people that opportunity, and I would imagine it's going to be a lot of lifestyle changes as a result of this. People actually understanding, appreciating what's important to them, and that's much like a fingerprint, right? Everyone's individual and people are wired a particular way. So to actually understand what you want in life, and if that is a sea change, tree change, great. I think it's shown for a lot of people that remote working is possible. So you don't necessarily need to be tethered to your office if you have an employer who is flexible, allowing you to do that. People can have the best of both worlds. It'd be great to live in a regional location or on a beach somewhere and sort of not have to commute to the office each day. So you're seeing that within real estate agents. And the good thing is that you're getting some of the talent out of the cities into the regions. That's great for real estate. And I think, it's probably not, and it's a theme maybe we can chat about over the coming 6 months, Tom, is how regional markets, and we're seeing this already on realestatebusiness.com.au, are going to become a lot more attractive for city slickers, and how that's going to influence and shape supply and demand in those particular markets, how agents operate within them, and how you can be an effective buyer in those markets. Because where there is demand, what typically happens, prices go up. So it's going to be a fine balance between securing an asset in one of these locations to potentially live in, or as an extension of your family home in the cities, and real estate agents doing what they need to do to not only attract that business but win it. Because these are, and you can speak to this, Tom, the competitiveness in local real estate agents in regional areas, that's highly competitive to win that business.
Oh, absolutely, 100%. And I actually will, extend on that and actually say, and even people that aren't necessarily making that sea or tree change, I've actually noticed the dialogue. People are actually assessing their own home, might be in the same location, but when you live in a home and you've actually been sitting in it for 6-8 weeks, you then begin to realize it would be useful having an extra bedroom. Hey, it would be useful to have had a pool or a spa in this place. Oh, it would be useful to actually create that room into a Zoom studio because I realize I'm going to be doing more Zoom work there. I think so. For all of that, it could mean I think people are going to go off and do a bit of renovating, but I also think that there's going to be a bit of upgrading because people are going to value their property more than what they did prior to COVID-19. There was a story here. So McGrath's, so that's again a movement amongst real estate agents. McGrath's eyes off plan development sector, and as most people that follow me know, I'm very close to John, who looks to refocus the emergence of off-plan development. Yeah, well, this is a classic case. Everyone, you come out of the plane, as I said in a previous video we did, that you come out, Phil, it's a new game. You're all on a bus, business economy, first class. Everyone's sitting in there. It's an open opportunity, and some people are seeing project marketing, some people are seeing commercial, industrial, maybe moving sectors. But this other story you ran in real estate business, which is when and why an agent might have to act in the tenant's interest. It's an interesting one because we know that real estate agents actually get paid. There's an agency agreement and they act on behalf of a vendor. They act on behalf of a landlord. But this story that you ran, I believe, in the last couple of days is talking about, hey, hang on a second, you might actually have to be a little bit smarter and just, don't sit there as a German Shepherd, but understand that people are looking at a beach ball, a tenant's looking at the red panel, the landlord's looking at the blue panel. They're both looking at a beach ball. They're looking at life differently. A real estate agent should actually try and help people see that it's actually a beach ball and we can try and work with it.
Yeah, and I think this is going to be an evolution to the role of real estate agents into the future, which is, I think, is going to be compounded just by this environment of COVID. And you would have seen this for the best agents and the best property managers over the years, is that you can actually support both sides of any transaction, whether it's a vendor and a buyer, whether it's a landlord and a tenant, to get the absolute best outcome for both sides. So this is New South Wales Fair Trading pretty much going in, and this is connected with these changes to being able to evict tenants from the 10th of June, that it's incumbent, the New South Wales government, New South Wales Fair Trading, saying it's incumbent on the property manager or the real estate advocate who's representing the landlord to make sure that they're actually supporting the tenant as well, and the tenant understands and appreciates their rights and being an enabler for making sure that tenant's interest is looked after. And this is what this is an evolution to. It's interesting, but that's what a good property manager should be doing anyway. But it just comes down to good communication with the landlord, good communication with the tenant. And by doing that, I think a really good property manager can empower the asset for the landlord by having stickier tenants, happier tenants, being able to manage or mitigate any issues or provide flexibility. It's what you should be doing.
Well said.
Love property? The current Buyer's Agent of the Year and Director of Pure Property Investment, Paul Glossop, does too. And right now, he's offering you the chance to secure his best-selling book, A Surfer's Guide to Property Investing, absolutely free. Simply jump on Pure Property Investment's Facebook page, hit the message button and type Smart Property to claim your free book today.
Another story, lending officer, and this was in the Advisor that was carried yesterday. A lending officer sentenced for giving misleading information. A former lending officer will serve an intensive corrections order after pleading guilty of 5 charges of giving misleading information in the course of engaging in a credit activity. According to ASIC, between December 2013, March 2014, Mr. Fares created 12 payslip, single income tax payment summaries and 3 letters of employment to support 5 loan applications. Geez, he was keen to get those loans through, wasn't he?
Well, this is what everyone's been working towards. The industry itself and the industry bodies, the MFAA and FBAA. I know you know the FBAA guys really well, Tom, to promote professionalism in mortgage broking. And when this sort of stuff happens, it shines a spotlight on what is a handful of operators who don't do the right things. So the industry, ASIC, the regulators have been trying to remove this type of behavior. It's just not on. It's unprofessional. This is not, there's different levels of fraud. This is very proactive manipulation of the system. But I think it's a clear message to mortgage brokers. There's also a clear message to people taking out mortgages that you got to play by the rules. Dodging up pay slips and dodging up tax payment summaries is fraudulent, and there's a penalty here. This broker's got a jail sentence from this. It's got to be commuted, I think, in a community service. But this is from stuff that happened in 2013 and 2014. It's 6 years ago. So if you're doing that stuff today, it doesn't mean it's not going to come back and bite you in 5 or 6 years' time. So it's a clear message to those very, 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 very small percentage of mortgage brokers that operate and act this way, that there is repercussions. And this is at one end of fraud, or, and I have seen worse in the past, but even if it's just a small thing as saying, oh, you've got, 2 dependents rather than 3 dependents to try and shape a mortgage application, that's also.
Yeah, well, this guy here's created pay slips and what have you. So He's creative. Major banks hike. So ANZ, one of the banks that I've got money with, increased its 2-year fixed home loan rate for own occupiers paying principal and interest by 10 basis points. Not a hell of a lot, but it reported a blowout of ANZ's turnaround times, which data from the bank revealing that mortgage applications are taking up to 23 days for approval. Okay, so you're basically looking at the journey of a buyer. Like I can see the impact that could have on auctions, a long approval, and but they're still cheap, aren't they, Phil? These rates here, 2%, 2.1, 2.19.
The banks and ANZ said the decision to do this wasn't a result of this, but this is the question to ask when you see these type of shifting of rates within banks. It's a really sharp rate. So what happens is that when a lender has a really sharp rate, whether it's direct through their branch network or most of this business now comes through mortgage brokers, what happens is that they get a whole bunch of inquiry and people lodging applications to secure a mortgage at that rate. And what happens, you get a huge bottleneck to actually get this stuff processed, which pushes out approval time. So often what you see, and this is not specific to ANZ, maybe or may or not, but I'm speaking generally, that banks will actually change their credit terms to stop people sending them mortgage applications, so to become less competitive. And that would mean that brokers will be sending people or borrowers to more competitive banks. So you see the flip side as well. If a bank has capacity, they've got funds to lend and they've got capacity to process it, over a period of time, they can offer really sharp rates or really, really sharp incentives to try and attract business. They'll do that through brokers, also through the direct channel. I'm seeing it now in my own portfolio. You can actually, some lenders will give you, cashbacks of $4,000 just to choose them as the bank. So, if you're shopping around for a mortgage, you've got to keep these things in mind. And, in many ways, ANZ could be trying to price themselves out or reducing the flow of business they want. And what should happen is that should go somewhere else.
Okay. Moving on from that, it's the story about brokers reveal which lenders are leading the way. So that's, another positive. I mean, the truth is, while you're trying to run your business in media and I'm trying to run my training business, we got brokers there that are actually sitting there and they're daily finding out who's good, who's not, what's hot, what's not. And brokers have, in this story here, which was run in The Advisor, they talk about rating the highest amongst ADIs and non-bank lenders. And it says here, Bank West, for the 4th year in a row, has been rated as the top performing bank.
Yeah, that's right. So Bank West, this is out of 24, I believe, ADI, so approved deposit taking institutions. So these are people who you can have a bank account with. We rate them. So this is through Momentum Intelligence, our research business working in conjunction with the advisor to go and do this piece of survey and piece of reports. It's been going on for many, many years. I think 11 years, this particular report, 800 odd submissions from brokers, pretty much giving their insights into the actions, the service, the products, the systems, the processes of the banks, and then rating them individually to give us the collective numbers. And brokers are saying that Bank West for the 4th year in a row is the number one across the aggregate of all the different areas that we measure. And I think by memory, there's between 15 or 17 different measures. So it's a good acknowledgement to Bank West that brokers think that they're doing the best 4 years in a row. So it's not by chance or accident. It's something consistent. And I imagine you see the same in real estate, Tom. The best agents like the RB top 100 agents are probably there every single year because they get it right and they continue to do it right.
Well said. Okay. Well, next week we're going to catch up. I'm sure we're going to be talking about the borders and particularly the Queensland border and what can we and can't do. I know that a gentleman that I know, Scott Dutton, that actually is a speaker in the conflict and negotiation management. He actually came over to Melbourne, not for business, but from Byron Bay. He lives in Byron. He flew from Brisbane to Melbourne, and then he flew back from Melbourne to Brisbane. And it was, he said to me, it was like being in another country. There was military, army uniforms. There was a 2-3 hour, wait delay. This is in Brisbane, So Very keen to see what actually happens with the borders there in Queensland. And also REB Awards finalists will be unveiled from next week. Do I presume nominations are finished for that?
Nominations have all finished. They're just shortlisting everyone right now. So over the period, and by the way, Tom, so the REB Awards are on I think the last Thursday in June. So about a month or so away. We've had more submissions ever in the history of the REB Awards, which has been going for 7 or 8 years. So this year, more than any other year, more submissions. These are full submissions filled out by real estate agents, networks, boutiques, all and sundry. It's the biggest ever in terms of number of submissions that have come through, which is really encouraging.
Yeah, well, I can picture a lot of the people that are participating in that. I presume that event's been run virtually by you.
It's going to be a broadcast. You go and check it out. If you just go to rebawards.com.au, principal partner list ready. It's going to be a big event, Tom, where our broadcasts are really exciting and energizing. You can actually now, the good thing is that teams will be able to meet in their own boardrooms and have little mini parties all over Australia. And I can imagine you're going to see this propping up from, every single state and every single little location, whether it's regional or office-based environments in the city or at people's homes. I could see these teams come together. You're going to at least be able to get 20 people together by then if you've got the room and the space. So you're going to have, I reckon hundreds of little mini events all over Australia of people coming together to watch the live broadcast of the REB Awards 2020.
Is that nighttime or daytime?
Nighttime starts about 7 o'clock. So 7 o'clock to 9 o'clock, black tie. So we want to see everyone dressing up. We're going to be beaming in. People are going to be going in. We're going into lounge rooms in the offices right across Australia to go and chat with all the different teams. You're going to be able to chat and engage with each other. We're going to have our winners being able to give their chance to give their speeches for securing these accolades. We're going to have all our sponsors there as well. So it's going to be a lot of fun, Tom. I'm really excited about it.
So it's a special conference that requires you to have a pre-purchase tickets?
Mate, it's free. Don't need to pay for a ticket. All you need to do is register. So what you do, you need to go to the website, just REB, just go to realestatebusiness.com.au, click on the awards. If you need to register, so you'll need to register, and then you'll need to say who you're with. And you can choose anyone at all. And then what we'll do is we'll team you all up in your own live interactive format to actually sit there and have a chat with each other and have some fun while watching the awards, or you can use the app to speak to anyone in real estate who's also registered. But what we're really trying to encourage is getting, smaller teams and offices together at someone's home or in someone's boardroom, crack open a champagne, get a nice boards of meats and whatever else, or some food in, or get your Uber Eats in and actually have some fun, your own mini party in your offices or homes, and watch the broadcast live.
Okay, I'll be watching 100%.
It'd be fun.
All righty. Phil, fantastic. I'll talk to you next week. Phil Tarrant from Momentum Media. Everyone, have a great week. We'll see you next week.
Thanks, Tom.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.